Good afternoon. Welcome to Halftime Report. It's 12 noon. We're halfway through the trading session. I am Reema Tendulkar. With me is Nigel D'Souza. And the mid-cap outperformance has continued for the fifth day in a row. So as we speak, the Nifty and the Sensex are up close to about 0.2%. The mid-cap's faring a bit better. That index is a gain of close to about 0.4%. The advanced decline ratio is higher. And now as we speak, you can see an uptick in names like a TCS. So that's contributing on the upside. Strength also seen in names like an ICICI Bank and ITC. It's also HDFC Limited, which catches your attention considering the weakness it's seen in the last few trading sessions. So if you pull up a 2-week chart of HDFC Limited, you can see the underperformance over there. Hi, Nigel.
Well, hi, Reema. In fact, I think we had an alert coming in there on the Shanghai market as well. It's up close to around 4% in today's trading session. And this month itself, it's up nearly around 13% odd. I'll be looking at the MSCI Emerging Market Index very, very closely. Because remember, owing to the high market capitalization out there, it has a very high weight on the MSCI Emerging Market Index. The Shanghai market has a weightage of nearly around 30% approximately. So if that market is going to, surge higher, then that's what's going to help the emerging MSCI Emerging Market as well. Even year to date, if you're looking at it, that market has done quite well. I think it's up close to 10% primarily because the Shanghai market as well is up more than 15 to 16%. But good going, Reema. Last three trading sessions, we have been on a bit of a winning streak. You put together today's 20-point gains. And in the last 4 trading sessions, we're up nearly around 200 points. That's after an 8-session losing streak when we lost close to around 450 points odd. So good going. Let's see whether or not we can sustain at these levels. First up, running you through all the top stories. The frontline indices start the week slightly higher on positive global cues, backed by ICICI Bank as well as HDFC Bank. The mid-cap index outperforms.
Adani Ports stocks nosedive after the company acquires an agri-logistics group company at a premium of nearly 1,000 crores. Citi downgrades the stock to a neutral, says the deal raises questions on capital allocation policy.
And the GST rate on premium housing is cut to 5% and affordable housing is cut to 1% without input tax credit. Now, Axis Cap expects inventory woes to ease as bulk remains in the under construction stage.
Shares of Motilal Oswal and IIFL Holdings sulk after SEBI declares their commodity arms not fit and proper. IIFL's Nirmal Jain says legal opinion being sought to appeal against the order, sees no impact on the other businesses of the group.
And the banking sources tell CNBC TV18 that they are unlikely to take the beleaguered of Jet Airways to NCLT at the moment. Look to continue with the provisional resolution plan. That's an exclusive.
All roads lead to the CNBC TV18 Rising India Summit in New Delhi. Prime Minister Narendra Modi, BJP President Amit Shah, opposition chief ministers, a bevy of cabinet ministers and a whole host of other newsmakers to be present. All right, let's dig deeper below the surface and tell you what stocks are moving and shaking in trade. And it's Adani Ports, which is on our radar. The stock has tanked close to about 8% after the company acquired a group company called Adani Agri Logistics. And Anisha, that's a pretty expensive acquisition.
Well, yes, that's what the brokerages are concerned about, that not only the valuations are expensive, the increasing number of group transactions and the intercompany exposure is really causing a bit of worry. Remember, Adani Ports has been cash cow for this particular group, and time and again, its proceeds and money has been used for the likes of Adani Power and Adani Enterprises now. And the brokerages are pointing out how the free cash generation for Adani Ports now can take a backseat because of acquisitions like this. Also, do remember that the company has a high debt as well as high pledge shareholding, and that adds to the overhang on the stock. Now, what are brokerages making of it? Well, Citi has actually downgraded the stock to a neutral and cut the target price all the way to 385 from 500 earlier. They've cut the target multiples on account of increased interest costs as well as increased debt. And they say that the valuation is expensive, and also it raises the question on the capital allocation policy of the company going forward. CLSA says that yes, the business of Adani Agro is good, but given the fact that it is done at a higher valuation, this would add to the street concerns whether there will be such more group transactions coming. And HSBC says that yes, it's a logical fit, and they're very bullish on the stock, saying that the recent correction makes it an attractive buy. But they say that The management has guided that there is no further asset injection that is expected from the group. So that is something that you can probably take heart from. But as of now, given the high pledge, high debt, intercorporate transactions, the stock is taking it on the chin, down about 9%.
Okay, all right, Anisha, thanks so much for that. The market just doesn't like this inter-promoter, buying and selling of assets within each other. We saw it with Vedanta Group. We saw it with regard to Adani Ports as well. And some of these companies, they have debt in their books, and after that, they're doing this as well. So definitely the street doesn't like that at all. But moving on then, Yash is here with us to tell us about SEBI's order on in terms of commodities and its impact on various brokerages. Yash?
Well, Nigel, both those stocks, Motilal Oswal Commodities as well as IIFL Commodities, have been pronounced not fit and proper by market regulator SEBI, and that order has come on the back of SEBI's investigation as far as the NSCL case is concerned. Now, just purely from the stock perspective, of course, both stocks, Motilal Oswal as well as IIFL, open with sharp correction, but if you see somewhere going through the course, there has been some sort of recovery, but still, of course, the stock has recovered. IIFL, so to speak, 6% from its low point, and Motilal Oswal about 2.5% from its low point, and that particularly has come on the back of certain comments made by Nirmal Jain of IIFL, where he says that on the back of the SEBI order, there won't be any material impact which will come as far as the commodity transactions are concerned. Under the entity which is IIFL Commodities, the business is just 0.2% of the net profit, and if required, the company can also conduct its commodity operations under the securities business. So no material impact as far as the business transactions under commodity section are concerned. And let's just hear what Nirmal Jain had to say about the whole SEBI order.
Okay, I'm not a legal expert and not read between the lines, but what I understand from my colleagues, that they've taken a cognizance in a fair way of all the factual representations that we have made. And this has been particularly challenging because SEBI was not regulating this exchange during its operations, one. And two, the real culprits have been trying to manipulate media and social media to confuse and influence public as well as regulators or authorities. This IICL company by itself also has no business now. Actually, in the commodity business, in any case, is contributes less than 0.2% of our profits. In SEBI's order, there is no reference to unlawful gain or anything else.
Okay, let's move on and get chatting about Jet and what's going to happen, what the future of the airline looks like. Are they going to go to NCLT or not? Ritu Singh joins in with the latest. Ritu?
Well, from the lead bankers in the consortium that have lent to Jet Airways that we've spoken to, it's very clear that at this point of time, there is no reason to drag Jet Airways into the NCLT for multiple reasons. Number one, a bank-led resolution plan is already in the works that SBI has proposed, and it has to now be approved by all the other lenders. And therefore, with that plan in place, banks want to push ahead with the resolution instead of taking it to NCLT. Two, this case is being resolved under RBI's Step 12 circular, which gives banks a 180-day window to find a resolution. Remember, the default for Jet Airways happened on 31st December. So therefore, for a 6-month period, that is until the end of June, banks do have time to resolve the account, failing which, of course, the company will have to be sent to NCLT. And the third reason is that most of the aircraft lease agreements have a termination clause in case the company files for bankruptcy. So these are the key reasons why it does not make sense for banks to take Jet Airways to NCLT. But of course, if the resolution plan is not approved by all the other lenders, or if the plan is not implemented in the 6-month timeline, these could be the reasons for the company to be taken to NCLT, but not at this point of time.
Okay, all right. Thanks so much for that, Ritu. Well, let's hop across to Sonal. She's standing by to tell us about the big news that came in the second half yesterday on the real estate space, lower GST and its impact. Sonal?
Thanks a lot for that. And as you rightly pointed out, lower GST on both the premium housing and the affordable housing segment. For premium housing, it has been slashed to 5%, and for affordable housing, it has been slashed to 1%. But remember, it is without any input tax credit. The other reforms include that the area cap for affordable housing projects in metro and non-metro has been increased to 60 square meters and 90 square meters respectively. Also, the definition of affordable affordable housing has been changed, and any house which costs below 45 lakhs will be considered as an affordable house. Also, GST is exempted on transfer of development rights, JDA projects, that is joint development agreements, and also on FSI. So these are some positives that are coming in for affordable housing. While we do have a lot of positive and negative impacts of this particular reform that has been taken, Axis Capital says that the positives will outweigh negatives in short term. So the negatives include that there will be a margin pressure of around 3 to 4% as the input costs will have to be passed on. The positives are that there is strong boost that is given to affordable housing, and 85 to 90% of unsold inventory is in this under construction segment. So that will give some boost to demand, and this will overall liquidate this inventory that is there in the system. So overall, while we are saying that there will be some negatives, this is a sentimental positive for the real estate sector. Back to you.
Thank you very much for that. I think we still have Yash with us, and he's going to tell us what the latest is on ADF Foods. Yash?
Well, ADF Food is the stock which is reacting negatively again on a SEBI order which was passed against the promoters of the company over the weekend. Essentially, SEBI in its investigation has found that the promoters of ADF Food had access to some unpublished price-sensitive information with respect to the buyback offer of the company, and they traded in the script of ADF Foods. Of course, a seizure of 1 crore from the promoters and 4 others have been ordered in the same case, but of course thin volume as far as the counter is concerned, but certainly a negative for the stock in today's trading session.
Okay, all right, Yash, thanks so much for that. Well, let's hop across back to Sonal. She's going to tell us about all the stocks that are in the news today. Sonal.
Well, a long list is that what I have. Well, starting with GVK Power and Infra, they have acquired additional 13.5% stake in Mumbai International Airport, and now the stake stands at 64% versus 50.5% earlier. The stake has been bought at 77 rupees per share, and now the stake is valued at around 1,250 crores in Mumbai International Airport. The overall value of the business is around 9,500 crore rupees. However, no funding details have been given as such. The question still remains, where will the company get this big amount from? So that stock will be in focus. Other stock that is in focus is New India Assurance, because the company will have to bear the brunt of claims as insurer of the incident that happened at the AO India event. A lot of cars were burned, and that is something that the company will have to take care of. I'm also looking out for STC, as Syndicate Bank has filed for, taken the company to NCLT for dues worth around 625 crore rupees. And in the broader markets, we are also seeing that these sugar stocks, they are buzzing yet again. The likes of Uttam Sugar, Mavana Sugar, Dwarikesh, Balrampur Chini, all of them are up around 3 to 15% in today's trading session. Back to you.
Thank you, Sonal, for that. A quick recap then of the top buzzing stocks at noon. Adani Ports, Motilal Oswal, IIFL Holding, Jet Airways, real estate companies like Suntec Realty, Godrej Properties, Oberoi Realty, Brigade Enterprises, ADF Foods, GVK Infra, New India Assurance, STC, Uttam Galva, Mavana Sugar, Dwarikesh Sugar, Ugar Sugar, Balrampur Chini, and of course the rest of the IT stocks. On that note, it's time for a very short break, but we'll come back and focus more on the real estate pack after the GST on premium housing has been cut to 5%, and that on affordable housing has come down to 1%. This, of course, is without the input tax credit. What impact will it have on the sector? Gulam Zia, the executive director of Knight Frank, on the other side.